Am I all set? Am I here? Okay, I think I got everything up. Um, oh, oh, hey, is it recording? Oh, it's recording. Oh, okay. Hey, everybody. So I kind of want to go over, do a little introduction. Um, you're gonna do a bar replay. You kind of got to know what to bar replay, right? So I kind of want to go over a few things real quick. So remember we talked about the candles. I have a little post on my Instagram, just live. I was just, just trying to help the people just real quick. But just to go a little bit more, I guess, give a little quick little overview real quick. So with candles, like I said, I like candles because I feel like they tell a better story about the price. Um, and candles kind of have like they just make me feel a little bit better about what I think about when it comes to price. But again, if you need lines, hey, use lines because lines are very indicative, very clear about what's the support and what's the resistance. Again, support is like your floor, resistance is like your ceiling. And with candles, the reason why I kind of like candles a little bit more though is because it tells me how we're trying to how the how the price is pushing up towards that ceiling or coming down to that floor. And it's kind of like you got this invisible, like think of the ceiling and the floor as like invisible, right? But like this force field, and you need, and there, this like this, every candle is like a fight, a battle, a war between the buyers and the sellers. And so you have this you have the buyers fighting to bring price down. You have the buyers fighting to bring price up, and you have the sellers fighting to bring price down. Now with candles, if you notice here, um, they work a little differently on each side, right? So for the bull, your candle is opening here. This is what would be considered your open, and it closes here. These wicks are the shadow, but they help you with the story a little bit, because when I look at this candle, what I noticed is that there was a lot of buyers here, a lot of buyers, and almost looks a little bit like algorithmic traded. And what that also tells me, so it was like no buyer, it was like a lot of buyers, no sellers. Um, until they got right here and try to really bring price up here, but the sellers was like, nah, man, you got to bring that back down a little bit. So they was like, okay, fine, we'll let it be, be right there. And then so again, so notice that no buyers, no sellers, and you have straight buyers, and they bring the price all the way up to here, but the sellers bring it back down, and this is where the price close. So when you see up here, open, high, low, close, this what it was referring to is basically, and that's what TraderView, just put it over there and it'll tell you open was 38.36, the low was 38.36 in this case because there were no sellers really at this point. So in the high, the candle got got all the way as high at least to 41.50, but it got closed at 41.13. So tells you a lot of buyers there. But then we get here, and then you notice that price opens up here. So with sell candles, the top is the open and the bottom is the close. And then the wick is like basically saying they was trying to sell it really down here, but now the buyers was like, nah, don't bring it that down. We in here. So they bring so price goes back up, and this is where price close. And that's just basically how it works. And typically you have price kind of, follow from here. It's supposed to continue from the last place at the close. So if price open here, technically price is supposed to open here for the next bar. And then if price closed here, typically the next part should be right here. Sometimes that doesn't happen and you get what is called a gap, which is when there's no price action in this area and price just shoots up. Let's find an example of one. Shouldn't be hard. Oops. See, a gap. See, if you notice, there's no price action, none whatsoever. So those are what we consider gaps. So, so now that you know the story of the candles, open and close for the buy candles and the sell candles, let's go to what you need to learn to do bar replays. So, actually, let me first continue with EMAs. Oh, wait. So with the EMAs, they're basically just a moving average of like the last period, the periods that you decide. So for moving averages, you could just change it to either 20, 50, 200, but I happen to have all three on one just to show you something that you could do for when you want to like into the market by either buying shares or get into a trade. So for in this case, um, the 20, of course, is like the last 20 periods, and this EMA is working off the close. So wherever when the EMA is using the data from when it closed, the closes closed here, 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 closed here. So it's using closed here. So it's using that information, the last 20, and then that is telling you that this is where the exponential moving average is around. And what you could do with this information is this can tell you that at this point, aggressive entry for a trade. And you can decide to use like 25 or 15. So let's say 15 to 25% of capital for capital that is designated for this specific trade. Stop. And this could be your mid aggressive or mod aggressive entry, moderate, And this can be a patient. And this is when you could, as the young kids say, load the boat or empty the clip. So this is where you basically designate the entire rest of the capital that you were allocating to the trade and just empty it all. Because this is a great spot. You was patient. You reward yourself by getting in this trade with a lot of capital. Because at this area, price was back at this area September 4th. So if price was to get back here, I mean, that's a major pullback. As long as nothing changes fundamentally with the company, though, like price moves like this, right? This is just basically how price moves. Sideways, down, up, sideways. That's just how price moves. And then so when the stock market goes down, I mean, most of the time it's not really, it's just price is correcting itself. People take profits, people sell out their positions, people move assets around. You just gotta, it's a lot of reasons that sometimes have nothing to do with the company itself, but just the market, just doing what the market does. Nothing just goes up forever. So you have to be comfortable when you see something red. You can't just go automatically panic because you're now red or prices getting, your profits are decreasing a bit. I mean, it's gonna go back up as long as you pick and did your research and picked a really great company. So that being said, you could use these as like entry points, you know. Um, Another thing you could do is, so you have some indicators. Oh, this is gonna be confusing. Let me just remove that. So, oh, I'm sorry, I didn't even talk about it. So if you use TradingView, indicators are here. You could just type in all the different indicators you want to use and keep them in, and and favorite them so that you can automatically have quick access to them. You can even save templates here of um, different indicator setups that you want to just keep, just so you can have it something saved and just go strictly to it. So I have a few of them, but I only really use like one or two. Um, but yeah, so just keeps the favorite. So uh, so let's go continue. So the RSI and stochastic. These are your trend indicators. They use a little bit of, they use different, but basically they do the same thing, where they basically are measuring the magnitude of price changes, right? Uh, the RSI is kind of like the indicator that tells you if a stock has been overbought or oversold. So typically, it's usually in the range of like over 70 tells you it's overbought. If it's below 30, it's oversold. However, I like to use support and resistance with the RSI. And the reason why is because not every stock needs to be in the um over below 30 or over 70. It's not all stocks need to do that. Sometimes you can just see that when price gets around here, it reverses. See, support, same thing with the RSI, resistance, and bam. That's when it kind of broke through. So that's why sometimes you need different indicators. So if you see here, the MACD is kind of like, there's not that much of a divergence, but you might need to understand what I mean by that. So the MACD is your momentum oscillator, right? It's kind of like a corresponding with like telling you how strong the momentum is in that trade. So if you notice here that when it's green, dark green here, it's extra long candles. And when it's dying down, see if it's selling, the candles are lighter. And that's because the momentum is dying. Um, and if you notice that you have these signal lines too, so you have one fast line and one slow line and one signal line. And if you notice that when the blue is over the orange, that you start seeing buyers. And when it crosses again, you start seeing it selling. So, and this is tell you this is a strong momentum and sell, but it's starting to die down. And so this is how you kind of like can tell when you could kind of want to, when I talked about like if I want to get in the put or something, if I see it out the band and I start seeing the dying momentum and everything is aligned all all in the clouds aligned perfectly and everything, tells me I can get in for a put. Um, but still, but I want to just basically tell you like this MACD, if you see it's such a big gap between the signal line, that tells me it's like a divergence. So you could know it's gonna be a really good bull run for a while, for a second. But then it starts dying down as soon as it gets here. And then it's you just get closer to when the gap starts to get closed in, you know, starts to sell. Um, and your RSI, like I said, you could use this as support. Resistance, and tells you if it's going to reverse. It respects this line. This specific style respects this line. It comes here now, but it's starting to change a little bit now. Like this was like the first few years, I think, because it just IPO'd not too like a few years ago. So it's starting to go on a little run now. So it's starting to be like I'm a little big dog stock now. So my resistance is a little higher a little bit now. Maybe it might be a little here now. Maybe it might need to be here. But that's why you got to keep up and like pay attention. So you gotta marry your stock, honestly. You gotta like marry it. Yes. You gotta like become, you gotta know it. You gotta know it in and out. So let's talk about the stochastic RSI. It's very similar to our RSI, very similar. Um, Instead of it, just you have a signal line, you have a fast one, and um, signal line. So the way this one works, probably should be very. I should make this all uniform. I never thought about that till now. But so if you notice here that it's kind of similar, where this signal line, when the orange crosses over the blue, is going for a sell. When the blue crosses over the orange, it's going for a run. Now we starting to see some bull action. And this is also like, again, very similar. So it's like this is like your oversold area, overbought as well. So I also want you to also keep in mind. So you can change the settings of your MACD. Um, but you could use different periods. So like the 15 and 30 basically mean the last 15 data points, and 30 is really slow. And you can also change the source. It could be the open, the high, the low. Personally, I just think it's better to use the close. That would be a better data source of data. And the RSI, I use 20. I just keep it at 20. Some people use 14. Some people try to be a little different. Might use one 17, 18. Everybody tries to find something that gives them an edge. Maybe 20 is okay for me, but it might be 18 for you, 19 for you with the stocks you use. You never know. So that's why you got to play around with the settings a little bit and find out what works for you. Same thing with the stochastic. Um, Same. What length do you want to use? 14. I just keep it under 14. Um, if I change it to 20, same thing with the source, close, but you can use the open and stuff. And you know, play with the settings, find out what works for you. It's a lot of, you got to do your homework. You got to like put in the work. Like it will be times where I'll just sit here and just go back and I'll just hit bar replay and see what I and try to see what I could see if I could like, start drawing. I don't really use these, but some people do. Start drawing your trend lines. Wow. Play around. Just try to get used to using the indicators and see if it gives you a really good idea of um, entry points and exit points. So this will be my support right there. So you see we in like the oversold area. So you see how this crosses right into here. It's light. The bars are smaller. It's not that much volume. The selling doesn't seem like it's gonna be there any much longer, right? It's gonna seem like it's about to reverse. I don't know. Oh, start seeing the green. It's going for a run. Oh, that's a big drop. Yeah, starting to. Oh, starting to move up. So that's what I just kind of want to basically explain. Just get familiar with the indicators. There's a lot of different indicators. I just use actually I understand these indicators first, but my go-to now, honestly, is really just the go no go with So the go no go was like all the MACD, the RSI, the stochastic, all into one. If you notice, overboard, sold, it's purple. Just means it's kind of like your momentum in the MACD. This is also like your momentum. You see, it's a very strong momentum when you see it get darker. When it's light green, it's kind of like losing momentum, and you see when it's like getting flat. But for you to really kind of get this, you got to know the MACD and the RSI and the stochastic. Like you got to know how to use them really good. So this is kind of like my baby right here, where I just use this really for my entry points and my exits. Hope this helps though. So anybody got any questions, just DM me, let me know. Hope this helps y'all. But all right.